Hi guys, this is Dr. Sadasivam once again with you, and today the Reserve Bank of India made a statement. There are four parts in that statement, and the first part was about the decision of the MPC, that is Monetary Policy Committee, what was their rationale, and this briefing was done by Shaktikunta Das, who is the governor of Reserve Bank of India. In the second part, what we will be doing is we will be talking about guidance, liquidity, what is happening in the financial markets, and some of the additional measures that the government is carrying out, and we will be talking about all that and what will be the broad approach of the Reserve Bank of India, and we will be talking completely about that. And this is the statement by the Governor, Reserve Bank of India, and this will be slightly a lengthy presentation. The MPC, that is the Monetary Policy Committee, met during the first week of June, and lot of policies that shape the future of this country, and keeping in mind the effect of COVID crisis, have all been discussed. One unanimous decision has been to keep the repo rates unchanged at 4%. And it was also decided that the accommodative stance, which is being carried out now, will continue as long as necessary, because there is a need to sustain the growth, there is a need to revive the growth, and we also need to reduce the impact of COVID and also keep COVID inflation under control. The marginal standing facility, the bank rates, etc., they will all continue unchanged. They will continue at 4%. The repo rate will continue at 3.35. There won't be any change. After this meeting of MPC in April, you all will know that COVID had spread into rural areas, right into small towns, and there have been numerous problems in the last 2 months, and with great difficulty we have been able to manage the situation, confront this situation, and in spite of all these trials and tribulations, it was necessary for the Reserve Bank of India to be very, very careful, and in these tough times, tough decisions need to be taken. And it is often said that whenever the storms are there, the trees take much deeper roots. In the words of the RBI governor, and as we are confronting this COVID crisis, this has strengthened our capabilities and resolve. There was a Greek philosopher by name Epictetus. He says, the bigger the problem is, the more fun you derive by confronting those problems. Chaliye, today let's look at some of the rationale of the recommendations of MPC, which is the Monetary Policy Committee. And they have clearly said that the GDP contraction will be approximately 7.3%. And in the fourth quarter, the GDP growth will be 1.3% year on year. We are expecting the southwest monsoon, and we are expecting lots and lots of bumper harvest in agriculture production, and COVID compatible behavior that is being implemented in all the states. They will all add a tailwind. Global recoveries are happening, and all of that will help us revive our economic growth. But on the other hand, if you look at the COVID infection in the rural areas, especially in the hinterlands, that's a matter of serious concern. Declining demand is another concern. The healthcare infrastructure is under very heavy stress. The medical supplies need to be increased. The vaccination needs to be increased. And we have to do all that in favor of the economy. If you look at the inflation, slightly the inflation had been higher in comparison to the last months, but we have good buffers and we are expecting a good southwest monsoon, and we can hope that the prices of cereals can be kept under control. On the global side, the commodity prices are going up, the crude oil prices are going up, the logistic costs are going up, and all these are leading to price pressures throughout the world. But the weak demand will keep the inflation under check to some extent, and we will look at what the MPC is saying and what their views and recommendations are. It is necessary for us who invest on the health infrastructure, because all of us are aware of the problems we had because of the second wave, and therefore it is necessary for us to confront the second wave and also prepare for the third wave. And therefore the current approach, which is the accommodative stance, we have to let it continue for the next 2 or 3 months. That's the view of the RBI, and that is how we will be able to contain, that is how we will be able to confront this kind of a situation. And I will also explain to you what is accommodative stance. There are various stances. We will explain all that little later. Now we will talk about some recommendations of MPC. The MPC is the Monetary Policy Committee, right? They said that in comparison to the first wave of COVID, this time the effects have been very serious. There have been problems in the rural areas. There have been lockdowns throughout the country. I'm talking about the first wave, right? But slightly different from the last time was, the last time the whole country was under lockdown, but this time in the second wave it was not a national lockdown, and therefore the impact of the on the economy is comparatively far less compared to the last time. Of course lockdowns were there, but that was at a regional level, and we have already learned how to manage this kind of a problem. If you look at the high frequency indicators like your cement production, electricity, steel production, your e-way bills, toll collections, all that has come down. These are all high frequency indicators, all that as a result of the second wave of COVID. The manufacturing has been affected, lockdown restrictions have been imposed in many states, your Maharashtra, Tamil Nadu, Karnataka, and the mobility indicators have also come down. But in comparison to the last year, things have been very good. If you look at the domestic monetary conditions, they have not been that bad because central government had done a lot of things. If you look at this vaccination policy, we can hope that in the coming months everything will be better and the economy will get normalized. The external economy is also getting strengthened, and this kind of a rebound that we are seeing in the global trends is seen everywhere, and it will support our export sector to a very large extent. And even in India, lots and lots of fiscal stimulus have been introduced, and there is a fast progress of vaccination. Of course, this is not just in India, everywhere in the world. If you look at the exports during March, April and May, the exports have surged like anything, because as far as the external world is concerned, there is a very conducive situation which is getting far. Now what is required is enhanced policy support by the government. Of course, the government is doing lots and lots of things. There is a lot of push in terms of quality, in terms of scalability, in terms of productivity, and also we can agree that there is the great reduction in the rural demand, but we can expect the southwest monsoon will really do well, and we can hope that the economy, including the rural economy, will improve quite a lot. These are good hopes. Let's hope for the best. But there is a lot of downside risks because of the second wave, and that's going to be a problem area. And keeping that in mind, if you look at the real GDP growth, we shouldn't have high expectations as far as the GDP is concerned. We can expect 18% in the first quarter, 7 will be there in the third quarter, and approximately 6 will be there in the fourth quarter of 21 to 22. Now, if you look at the outlook of inflation, because of favorable base during the last year, because we are talking about the headline inflation, it will be slightly higher during the first half of the year, and we also need to see whether the monsoons will be good, supply side interventions will be good, etc., etc. But the government will support all these initiatives. But third wave is also going to be a great issue. Active restrictions will be there, and it may also have some kind of impact in the GDP growth, and it's very difficult to keep the supply side shocks under control, and probably that's the reason to expect inflation slightly on the higher side. That is why the government is taking all these steps, not just the center, both the state, because if the supply side bottlenecks continue, then the inflation will go up, and as a result of that, we can expect the CPI inflation to be approximately 5.1% between 21 to 21. 5.1 will be there in the first quarter, 5.4 will be in the second quarter, 4.7 in the third, and approximately 5.3 we can expect in the fourth quarter. That is as far as the inflation figures are concerned. So we are able to balance the risks as much as possible. So I would like to give you some extra data in terms of what the RBI will be doing to manage the liquidity front. Now, the first job of RBI throughout the pandemic was to ensure conducive financial conditions, because the financial markets, they need to function efficiently, because that's required. In that we all will agree that the RBI and the government, they've done lots of things. We are economists and we monitor all these things from system level liquidity perspective. The liquidity has been managed very well. The stressed sectors have been taken care of very well, as a result of which, whether it is the borrowing costs or the spreads, they've all come down like anything, which was one of the reasons we have been able to confront this COVID very successfully. Whether it is private borrowing or whether it is bonds, they've all been incentivized because of lower interest rates. Even if you look at the statistics of the 28th of May, the money supply increased at 9.8%. There are money supplies like M0, M1, M2, M3, etc. The bank credits have improved by 6%, and all these are extremely good for the country economy. G-SAP auctions have been initiated, and there were some green shoe options also introduced. I will be putting up a separate video to explain all that. So all these things have made RBI's policies very transparent. But the second wave has hit us very strongly, and therefore the RBI needs to focus on equitable distribution. What kind of lessons have we learned in the Indian context? That is required, because deployment of unconventional resources are required. We need to have out of the box kind of a thinking. Now we have proactive and preemptive approach for the market based policies, and whatever RBI and the government had been doing, they will continue doing that, right? This commitment has been given by the RBI governor. This is not a political post. If you look at G-SAP 1.0, you would remember when the RBI governor, he clearly announced that in the auction in 1.0, he said that the market participants have shown a lot of interest. If you look at the bid cover ratio, which was 4:1, supposed to be an extremely successful, I will explain what is bid cover ratio in a separate video, right? Now, if you look at this liquidity drain, one of the important focus was to restore the CRR. CRR is the cash reserve ratio. And even if you look at time and demand liabilities, all that have been taken care of. And in fact, there was a revival of 4%. And this is also the figure of 4th of June. I think 2-3 weeks back, there have been some auctions that was on the 22nd or 23rd of May, if I remember right. And if you look at the redemption of government security, that's 52,000 crores, and whatever restoration took place in the CRR, everything has been completely neutralized. And this positive externalities, we are talking about G-SAP 2.0 in the your corporate bonds, your financial sectors, all that is very clearly visible. And if you look at interest rates, commercial paper or 90 days treasury bills or certificates of deposits, all these, the interest rates have come down quite a lot, and in order to increase the borrowers, pensioners are asking, please give us more interest. But that's not good for the country, right? So the LAF, which is also called as long-term repo, reverse repo operations, your foreign ex operations, special OMOs, open market operations, all that is required because we need to improve the liquidity conditions. What is the meaning of liquidity conditions? Because there is a need for money to get circulated in the market. That is how the liquidity will be able to support the market, and that is why the government is doing regular OMOs, open market operations, because there is a need to inject cash into the market, right? And apart from that, more than 60,000 crores have been done in the G-SAP one, where both purchase and sale options, these are called as Operation Twist. Why was that done? All that was done just to ensure smooth evolution of the yield curve. You know, that's how the RBI has to do, and that is how you will be able to manage liquidity in a far efficient manner. So keeping all this in manner, there will be another set of operations that will be called as G-SAP 1.0. In that G-SEC, once again, right, 40,000 crores will be done, in which 10,000 crores purchase of SDLs. SDLs means state development loans. Through some of these papers, the state governments can also borrow money for their own schemes like free laptops, free cycles. Delhi government gives free tickets for ladies also in Delhi bus, right? So in which there will be secondary market purchases. There will be approximately 1.2 lakh crores, 1,20,000 crores. All that is being done just to support the market. You know, more of these will be released by the Reserve Bank of India, and we are talking about G-SAP 2.0, and we can wait for these announcements, and as a result of these announcements, we can expect the market to respond very well. We are talking about G-SAP 2.0. Now, if you look at the capital inflows, it has increased quite a lot, and there's a lot of money coming from foreign countries. But there is an issue, because this is hard money, because this leads to a lot of volatility in the financial markets. So there is a lot of volatility in the market. These are unintended fluctuations, as a result of which our own monetary policies are getting disturbed, and therefore there is a need for two-side intervention. So we need to have countervailing policies. We need to look at foreign exchange. We need to look at foreign markets, and that is how we will be able to stabilize these liquidity conditions, and that is how we will be able to make our liquidity policy successful. Because we also need to insulate ourselves from the global shocks. Every time we can't be completely dependent on them, right? RBI is buying foreign exchange, selling foreign exchange. That will keep continuing just to maintain our currency. But stability and orderliness is very important, and both the government as well as the Reserve Bank of India, they need to focus on these issues. As a result of all these issues, our balance sheet is extremely good. Our reserves are getting accumulated, right? We saw last week our foreign exchange reserves has crossed $600 billion, right? You know, $600 billion. But there are some pitfalls of having a huge foreign exchange, right? So I will be putting up a separate video, some pitfalls, some disadvantages of having a huge foreign exchange. Okay, that's, you know, put it up for some other session. But at one point of time, when I was a TCM in Maruti, the 600 billion used to be the whole GDP of the country, right? It's not that some angel came and did all this. All because of carefully crafted plans by the government of India. We've already crossed $600 billion of foreign exchange. So these are some of the things that will give us a good amount of leverage, good amount of strength, whether it is global crisis or global spillovers. There's no need to fear, because we have good stock of foreign exchange. There is another issue. A lot of economists are talking about, whether it is economists or market participants. They are all showing curiosity on forward guidance. Remember, in the month of April, MPC had met and they had recommended state-based rather than time-based policies. Today, we are all suffering from this COVID pandemic, and it's very difficult for us to forecast exactly when the economy will improve, because there are so many uncertainties, and in spite of all this, whatever the RBI had in its control, they have been controlling, and they will continue to use all the instruments under their control, and we all need to sustain the growth, and it's all part of RBI's responsibility, and they are discharging their responsibilities in a very efficient manner as far as we economists are concerned. We also need to look at the financial system, and that is extremely crucial, because Shaktikunta Das says that adequate provisioning needs to be done, corporate governance is important. All these things are extremely important, and the government needs to facilitate. We're not sure if it was there earlier or not, whether it is banks, whether it is the NBFCs. We need to focus, because these are at the forefront in fighting the COVID crisis, and RBI had given 100% commitment that they will provide a sound and efficient financial sector in order to make the whole system strong and robust. And there will be continuous assessment, monitoring, all that will be done by the Reserve Bank of India, and wherever required, RBI will take additional measures to contain the situation. There will be a separate announcement by the Reserve Bank of India detailing all this, but all these will come in part B of the monetary policy. The RBI governor's statement, along with the statements and recommendations of the MPCs, etc., and whatever announcements we are talking about now, they will all, including the resolutions and other data, all that will be officially coming out, and you will also see that in Economic Times. I think some articles have already come, and now they've also started an on-tap liquidity window just to contain the adverse impact of the second wave, especially the contact intensive the sectors. There will be a separate liquidity window consisting of 50,000 crores, and that will continue till the 31st of March, and there will be a 3-year tenor period, and this will be given under the repo rates, right? So whatever banks lending to travel agents, tour operators, hotels, adventure sports, aviation services, ground handling people, supply chain, all these sectors, even private bus operators also, your car repair people, our Maruti authorized service stations, etc. Everybody will be covered. Your C&F agent, your beauty parlors, all these guys will be covered under these incentives, right? So whatever liquidity banks have as on date, that will be called as a COVID loan book, and the respective banks can park this money with the Reserve Bank of India, and they will be given this money at 25 basis points less than the repo rates, right? In other words, you can say it will be 40 points more than the reverse repo rates. And whatever difference we are talking about, these 40 basis points, these 30 bips points will all add to the profitability of the bank, right? Because all these loans will be considered as lending to priority sector. Of course, there will be some regulations, all that will be there, some conditions will be there. Otherwise, we don't want people to take that money and run away out of the country, right? So there will be another special measure, which will be a special liquidity for SETB. Growth impulses are very clearly visible, and credit is extremely important. And that is why RBI is going to give fresh support of 50,000 crores for all India financial institutions, because this money is required for new lending in the year 21 to 22. 15,000 crores have been given to SETB, and we need to support micro and small, medium medium enterprises, which we call as MSMEs. Whether it is MSMEs, small businesses, those guys are struggling for money. Money is required for them. So even for them, there will be a separate liquidity window which will be open for them. And more than 16,000 crores will be given for on-lending and refinancing. And of course, some norms are being formulated, and there will be an official circular from SETB on this particular subject. Don't believe my words. SETB will be releasing a proper circular, and whatever schemes have been announced, RBI has already conducted lots and lots of meetings with SETB, whether it's repo rates, reverse repo rates, etc. will continue for a little more time, and if required, changes will keep on happening. Right now, we are also talking about Resolution 2.0 framework. This announcement was made on the 5th of May. What it contained was whatever stressed sectors, whether it is MSME, whether it is small businesses, loans to individuals, doctors, chartered accountant, architect, etc., to improve their liquidity, the Resolution 2.0 will be extended, and it will be extended, and it will also be expanded, and therefore the maximum aggregate threshold, what we are saying is that will be increased from 25 crores to 50 crores for MSMEs or even small businesses, loans to individuals. For all these people, it will be increased from the threshold limit we are talking about, which is from 25 to 50 crores, which is 100% increase, right? The next one, we are talking about margin trade. We're talking about foreign portfolio investors, because this is the money which is coming from foreign countries, because those guys are coming and investing in the Indian debt market, Indian stock market, etc., to promote all this, including the ease of doing business for people coming from foreign countries. Some of the authorized banks and financial institutions on behalf of Government of India, they can give these facilities to those investors, right? We're talking about FPI, foreign portfolio investors, and a lot of that is being talked about on those aspects. And secondly, we are talking about certificate of deposit, CDs, your rural banks, regional rural banks, RRBs, they can use this liquidity window, the one which RBI has started, because these regional rural banks which are there in remote villages and hinterlands, they also need money at competitive interest rates, right? So that they will be able to lend to the last mile people, your vegetable vendors, small traders, etc. So they will be able to issue certificate of deposits, and all issuers of CDs, what they can do is they can buy back those CDs also. They can park some of those CDs with the RBI for more liquidity. So much of flexibility has been accorded just to ensure liquidity is there in the system. There is a last announcement, which is the availability of a National Automatic Clearinghouse, NAC, that will work 24 hours in a day, guys. And these are bulk payment operating systems, and there will be one-to-many, money-to-one, credit transfers like payment of dividend, payment of interest, payment of salaries, payment of pensions, all that can be given through it. And even collection of payments like electricity, gas, telephones, your water, your periodic installments, your loans, your mutual funds, your insurance premiums. It will be dealing with all these aspects. Currently, the NAC is one of the most popular direct benefit transfer instrument, right? Crores and crores of people are getting subsidies. People are getting it. Once upon a time, right, there was a lot of pilferage in the middle, but now, keeping the customer convenience in mind, it will be 24 hours availability, whether it is your RTGS availability. Currently it's available only on working days, but in the coming days it will be available all 365 days in a year, right? The system will keep working very efficiently just to ensure convenience to general public, and this will start from 1st August. Don't go to the bank tomorrow, right? Tomorrow. You have to wait for some time, and these facilities will be available even on bank holidays, and proper circular will come. Like I said, please don't go there tomorrow, right? RBI is doing all these. And now further, what RBI has in mind is, during the last year, they've done lots and lots of things to confront the pandemic, the prices, and they have been doing a lot of things during the first wave and even during the second wave, because the work of RBI is to ensure financial stability. The financial cogency needs to be maintained for all the stakeholders, and therefore it's extremely important. The sudden increase in the second wave, we were getting this nascent recovery, but the second wave has disrupted everything, guys. You all might have seen that, all that has been. But of course, look at how the stock market is improving. The supply conditions are improving in spite of the second wave. The RBI will continue to monitor all that. They will continue to think out of the box. They will plan for the worst but hope for the best. But whatever is happening, whatever decisions RBI is taking, they are keeping growth of our country in mind, and we will once again come back to this growth mindset. And this confidence is not given by ordinary person. He is the RBI governor. All that has taken India to one of the prominent positions in the world, and this will change the whole narrative of the world, because what's the need of the hour is we shouldn't be afraid of this, but we need to collectively join together and face this uncertainty. Otherwise, there are lots and lots of positive things which are happening. There is an indomitable spirit in the minds of Indian people. The Indian people have shown that resilience, because the RBI governor appreciated the resilience of each and every citizens. We hope that the resilience, the courage that people have shown every day. And he also quoted Mahatma Gandhi's quotes, right? He said Mahatma Gandhi did not lose his optimism even during the darkest hour. So the RBI governor is giving Gandhi quotations, and Modi Saab is giving Tiruvalluvar quotations, and Shaktikunta is a Tamil Nadu cadre IAS officer. We are all proud of him. I'm also from Tamil Nadu. Yes, there have been lots and lots of issues, but in such a short time, we have been able to rebound from such a big crisis. So once again, let me repeat that it was not some angel who came from the heaven and corrected the situation. The state government, the central government, this is not a political video. I'm not talking about any political party, but all these, the state governments, the central government, they all worked in tandem. Everybody has worked, right? As a result of which we have been able to face this COVID crisis. This southwest monsoon is going to be happening. There's going to be severe rains, and things will improve. We can hope for a bumper harvest. The growth impulses are clearly visible, and I request you to go through the proper RBI circular which is available in the website and look at the share market, how it is jumping, right? In the coming week, I think we can hope the share market to cross 16,000. Don't think only Ambani and Adani will benefit. Every single person is going to benefit from this, because share market is a reflection of the country's growth, right? Because only if the companies grow, there will be employment opportunities, and only if there are employment opportunities, people will get their salaries, and only if they get their salaries, they will be able to spend, whether it is cars, your televisions, your refrigerator, your white goods, etc., etc. Okay guys, thank you so much. This is Dr. Sadasivam once again, signing off till we meet again. Jai Hind.
உடல் சுருங்கி விரிந்தால்